Hello everyone, welcome to the ichimokucharts.com hourly analysis for the SP 500 for Thursday, November the 11th, 2010. Well, the market gapped down on opening, and we had a very large red-bodied candle that began the first hour of trading. And in that first hour of trading, we had the market making a new lower high and lower low. So the trend had changed to the downside immediately in that first hour. Subsequent to that first hour of bearish trading, the market rallied, and we had the market creating a higher high and a higher low in the fourth hour of trading, and a new first time frame uptrend. Just looking at that first hour of trading's candle, we did see a very large red-bodied candle, and that meant that the sellers made some very solid net bearish progress in that hour. But they did fail to take control of the market. They could only close the market at the midpoint level. And that means that neither side, neither the bulls nor the bears, took control of the market. The long shadow on the bottom tells us that the sellers actually lost the commitment that they were exhibiting down around when the market was trading down around the lows around roughly 1204 to 1205. Now that coincided with this swing low from the previous day's trading. And that's an area that we do need to watch as potentially strong support if the market does test that area again. Now, the market in this rally actually tested the window that was open. That's this gap when the market gapped down at the opening. That's a window. And in candlestick charts, gaps or windows are an area of support or resistance, and the market has found resistance in that region. We can see in the second last hour of trading that following a bullish candle, that we had a very small green body, so the buyers made even less bullish progress than they made previously, but they lost commitment, and we can see that from the long shadow on the top of the candle, so a loss of commitment for the buyers there. In the final hour of trading, considering that we've got strong resistance there at the window, the market changed trend, and we had a candle with a lower high and a lower low. Unfortunately for the bears, though, the short-term dynamics didn't favour them. We actually had a green-bodied candle. What we should have seen would have been at least a red-bodied candle, but in this case we had a change of trend to the downside, but the bulls still made net bullish progress. The buyers made net bullish progress. The sellers did lose commitment. We can see the shadow on the bottom of the candle, so the sellers also lost commitment. So there was really no follow-through from the bears, even though they were able to trade the market down below the previous low. Now, all of this coincided with the market trading within the cloud, and the cloud in Ichimoku charts terms is a neutral trading area. And we can see, while the market's been trading within this area, a lot of shadows on these candles. And that represents buying coming in if they're on the bottom of these candles, and that's happened quite a few times, and certainly in the last hour of trading. Now, with the market closing within the cloud, it means that we have a neutral market in big picture terms. So we'll be waiting for a breakout up above the cloud, and certainly a close. The second hour of trading broke out above the cloud, but found resistance at the pink line, which is the Kijun Sen. And we know that the Ichimoku lines will hold as areas of support or resistance, and that's exactly what's happened in this case. If we do have a breakout up above there and a close in that first hour of trading, then that is an area that we should be watching, and it coincides also with the top of the area of the window. So that's an important area for the market in the next day's trading. Up above there, we should have potential resistance at roughly about 1220. It was a previous area of support, which has turned into support and then resistance. And within a zone, it is offering itself as resistance again. If the market does trade up above there, we had a lot of indecisive trading and some very bearish candles as the market attempted to trade up above 1227. So very good solid resistance up above. But by the same token, very solid support down below. Anywhere within the cloud from roughly 1213 down to roughly 1201 is an area where the market could find support, in particular around 1209, which is a previous level, and certainly at these swing lows down around 1205. Very important and strong areas of support. Now, if the market does trade down and close outside of the bottom of the cloud, then that would be a bearish signal, and we should then be looking to the market finding support down around 1196, which, if we look back here, was an area of fairly strong resistance to this market, which was subsequently broken. Now, the market is trading down below the Kijun-sen, so the market is bearish in the medium-term time frame, but it's also trading above the Tenkan-sen, which means that the market is bullish in the fast-term time frame. So we're getting a lot of conflicting signals in this market at the moment with regard to our Ichimoku indicators: neutral in the long term, bearish in the medium term, and bullish in the fast term. But with the Kijun-sen and Tenkan-sen, the market is also trading very close to those indicators, suggesting that we have pretty much a neutral market in all three time frames. So very important next few trading days for this market. We have the market interacting with some very strong resistance overhead, some very strong support down below. We really do need to be careful how we trade this market over the next few days. And to the upside, a breakout up above the 1227 region would be very important for the market. A breakout certainly down below the cloud will be important, but there is very strong support all the way down, extending down to around 1180.